What's going on, everyone? This is David Fuchs from Carson Wealth with your monthly market update. We're recording this on July 1st. In this video, we're going to talk about how the markets performed in Q2, the factors that drove that performance. At the end, I'll tell you what we're keeping an eye on for you as we head into Q3. So we just wrapped up Q2, and what a blockbuster quarter it was. We had the S&P 500 to finish the quarter up 15%. It's now up, as you can see in the chart, about 9.5% on the year. We got the tech-heavy NASDAQ, did even better, up 21% for the second quarter. It's now up about 14% for the year. For both indices, that's actually the best quarterly rally since the second quarter of 2020. So going back 6 years. Huge turnaround from the pullback we saw in Q1. So how did we get here? Well, a big reason the market just keeps on chugging forward, even with war, even with inflation in the headlines. It's artificial intelligence, aka AI. We have the largest technology companies. They're pouring record sums into AI, well over $500 billion this year alone, building out the data centers and building out the chips behind it. And that wave of investment, that's been a very powerful engine for the market and a major reason why technology keeps leading the way in 2026. And it's not just AI either. Let's talk about earnings. So the broader fundamentals remain extremely strong. If you remember from last month's market update, first quarter earnings were among the best in years, with the large majority of S&P 500 companies beating analyst expectations, and not only beating them, but beating them by a very wide margin. So what that tells us is the gains we've seen, they're grounded in real corporate results, not just enthusiasm. That's a very important distinction for long-term investors. Now, let's shift a little bit. Let's talk about the headwinds that we've been watching, that really everybody's been watching for months, and of course, that's inflation. Last reading we got was from May. That came in at about 4.2%, those CPI numbers, and that actually was the highest it's been in about 3 years. So, of course, on the surface, that looks very discouraging. However, it is backward looking, and energy made up more than half of that increase. We fast forward to June. We saw some real progress towards peace with Iran and towards reopening the Strait of Hormuz, and that took an immense amount of pressure off the energy market. Oil, which spiked above $110 a barrel when the conflict first started, it's actually fallen back to around $70, and the national average at the pump dropped to about $3.85 a gallon, which is well off the high from back in May of about $4.55. So the pullback in oil is very important, and it's a big positive for the inflation outlook in the back half of the year. And actually, a number of economists now think May's number was the peak. That's great. We'll get June CPI numbers in a couple of weeks on July 14th. So we'll see then if it in fact was the peak. I do want to add one important caution though. The peace is still fragile. We've seen a handful of flare-ups. So it is genuine progress, but it's not a done deal. And it's something that we are monitoring very closely. Let's talk about the policy side quickly. So the Fed held interest rates steady at its June meeting, and the market is no longer counting on rate cuts this year, which is a huge change from where we started 2026 when the market was pricing in a few rate cuts. Well, the Fed meeting on July 29th, rates are expected to stay where they are for that meeting. And then the big one is September 16th, which is the first meeting where the market is currently pricing in a potential rate hike, something that we are keeping a very close eye on. All right, so to put a bow on this, looking ahead into July, here's a couple of things that are on our radar. First, second quarter earnings season that's going to kick off in mid-July. Did those very strong earnings from Q1, did they continue? Did they pull through to Q2, or was the first quarter an anomaly? The next inflation report, we're going to get some CPI numbers on July 14th, and that really should tell us whether May really was the peak in inflation like some analysts are suspecting. And then lastly, we'll be watching, of course, very closely to see whether the progress towards peace with Iran holds, since that's really what's keeping a lid on energy prices and driving the market and inflation right now. Overall, though, none of it changes our long-term approach. These are just the signs that we're keeping an eye on in July and moving into Q3. So overall, the message here, it is a good one. As always, if you have any questions or you'd like to talk through how any of this affects your specific plan, please don't hesitate to reach out. Enjoy your July 4th weekend, and we'll see you next month.